Hello, everyone. This is Realtor Linda Peltz. Today, we're back with Michelle from the Hero Loan team with some great information on the recession. Michelle, take it away.
Hi, everybody. Good to see you guys again. So I was just talking to Linda about how a lot of people may think it's a good time to wait to purchase because we may be going into a slight recession, and how the idea that when there's a recession, housing prices drop. I actually have a little graph I want to put up on the screen really quickly to just kind of show, let's see. Yeah, here we go. To just kind of show how that looked in other recessions. Can you see that there, Linda?
There it is, popped in.
All right, perfect. Yeah, so we've had a few recessions in our lifetime here, and it just kind of shows what housing price. Yeah, exactly. And one of them, of course, probably the one that most people think about when they think about recession is 2008. That's right. But right, exactly. But the difference between the recession in 2008 and these other recessions is that 2008 was actually caused by the housing crisis. And so there were a lot of exactly. And so there were a lot of practices that were in place at that time that caused some very unstable loans happening and things like that. Whereas the rest of these recessions didn't really have anything to do with the housing market. And as you can see, the most recent recession in 2020 saw a housing price increase of 6%. Same with 2001 and 1980. So as we kind of keep that in mind, it's there are some really important things to think about. And first of all, lending practices have changed dramatically since 2008. They put a lot of checks and balances in place so that we can't get to a position like we got to before. Some of the major factors that contributed to 2008 was that people were doing loans that would increase in housing prices in monthly payment. That's right. That's right.
That
Adjustable rate mortgages.
Yeah,
exactly.
That was a big one back then. Yeah. And then they had that big balloon payment at the end. You're like, what?
Exactly. And although adjustable rate mortgages are still available, there are some huge differences when it comes to an adjustable rate mortgage, if that's the right decision for you. And one of the biggest differences is that when the bank is deciding whether you qualify for this mortgage, they're looking at the maximum payment you could be subjected to, and can you afford that with your current income. And so you can no longer qualify for a mortgage that's going to end up being most likely defaulted.
Yeah, your income can handle. Yeah. There's a formula. What formula? I know it, but tell me what the formula is that you guys use for a lot of that.
Well, we just want to make sure, I mean, I can make it kind of in the most basic terms possible so everybody can kind of understand that. But basically, we're just looking at all of the money that you make, so whatever your income is, and then we're going to take a look at all of the debts that you currently have to make sure, what your car payment is. Maybe you have some credit card payments. Maybe you have another house payment, all of these different things. And then that becomes your debt ratio. So then we just do your debt and basically your income and take your debt, and then that's your debt to income ratio. And so with that, we decide exactly how much you can afford for a payment.
And they like do 50% of what's left or something. What is
so that? It just depends on what loan you're looking for, whether it's a conventional, an FHA, a VA, or in very rare instances, a USDA loan. And so the debt to income ratio kind of varies with each of those. And actually that's kind of where we come in a little bit too, Hero Loan Team, catering to heroes in the community, because if you are falling into one of our 5 categories, either police, fire, and I should say law enforcement, because it's any branch of law enforcement and any employee in there. Firefighters, military, both active duty and veterans, education, anybody working for a school district or university, and medical professionals, whether they're pharmacists, CNAs, or doctors and nurses, or everything in between, they will actually be eligible for sometimes a debt to income exception. Now, it's not going to be anything crazy, so that
because we don't want another recession.
That's
we gotta
absolutely
stay
right.
away from crazy in the beginning in order to avoid crazy in the end.
That's absolutely right. That's absolutely right. Probably the highest debt to income ratio allowability comes with VA loans. And then it would be conventional and then FHA. So just kind of putting in
those different loan programs, they have like different qualifications. So there is no straight pat answer for any of them. And you can pull two different people that might be in the exact same profession, and it's going to be very different for both of them.
That's exactly right.
Each other's background. It's kind of hard. I know. Yes. I get a lot of those questions. I'm like, I'm just a realtor. Let me get you over to a loan specialist, because there's no pat answer to give them. So
that's absolutely right. And there's a lot of misinformation out there too for the consumer. So a lot of times we have seen people operating on the idea that I don't make enough money, or I need more of a down payment, or housing prices are going to drop or whatever.
And we're not going to have that recession like we did. I know everybody's wanting that recession like we had in 2008. You don't understand. You don't want that here. You don't want those house prices to drop that far, and they're not going to, because we will probably not hit that type of a recession for another 100 years. I wouldn't imagine. I can't feature them letting that happen again. I mean, I'm not saying we won't have a recession, but it'll be more like that 2001 versus the 2008 one. So
right, or even 2020. And so it's very important that if I am wanting to purchase a house, that I talk to a mortgage loan officer and just see what the true facts are about what I need to get into a home. And I might not be ready today. That might be true. But my credit score,
you might not be ready that moment, but you might be ready in a month. You might be ready in 6 months. You might be ready in a year. It might take you 5 years. Whatever plan you guys develop. And there's no obligation. It's not like you go talk to Michelle and she's going to strong arm you into signing something, because if it's not going to work, it's not going to work. So
right. But it does get you on that path, because then like, oh, well, I haven't been claiming my income because I'm 1099. I've been writing too much off. Now I don't have enough income. I need to be claiming more income. Or maybe I am spending a lot on credit cards and holding a balance there. And now I know that what I need to do is pay off my debts. Whatever it is that gets you on the plan and gets you on the right direction towards home ownership, rather than just making these guesses based on information you may have heard on the internet, or maybe your best friend told you about their home purchase. But like Linda said,
or your mom and dad who's, not had a mortgage for, 50 years.
That's right. A lot of people do. They just take what, their dad, they trust them, whatever. And yeah, a lot of times it's really important to look at what do I need, because there are, lower down payments, 3.5%. And then also help with those down payments for a lot of people that are out there. So you may think I need to save. And really the housing prices are going up. They're going to continue to go up because we don't have the inventory to drive them back down. So you're not going to be saving money at the same rate that the housing prices are increasing. So it's better to get with a loan officer and see, like, what can I do about a down payment?
Mm-hmm. Yeah. Very true.
Mm-hmm.
Excuse me. See, I'm human too.
Yeah, that's right. That's right. But yeah, so that's the, I guess the takeaway here really is that if you think that you should wait to get into the market for whatever reason, if you think if I wait a year, housing prices are going to come down. If I wait a year, I'm going to have more money down. If I wait a year, my credit score is going to be at a certain point. Unless you've talked to a loan officer that tells you, hey, this is the path to that, then you just don't know. And a lot of times too, with credit scores, you know, people have a consumer credit score, whether it's Credit Karma or on their credit card or whatever, they're seeing this credit score and they think this is my credit score. The reality is no, it's not, you know, not, and we use a specific credit score in mortgage. So when we pull that, you might be like, oh, it's actually this other score that's completely different than what you thought, sometimes higher, sometimes lower. But it's really important to understand exactly where you sit if that's ultimately your goal.
Yeah, it's so important to kind of know where you fit in and get legitimate help. And the thing is, through all this, the only certainty is rent's going to continue to go up. So
that's true.
Okay, might stretch you and you might be paying less rent right at the moment, but you know, and your house payment might be a few $100s more a month, but guess what? In 10 years, you know, your rent's going to continue to go up to where eventually your mortgage is going to be lower. So it's a balancing act between keeping life together and because it's a struggle, you know, you got to have a roof over your head. So
yeah, that's absolutely true. And that's such a good point, because that is what people like really benefit from when it comes to having a set mortgage, is that mortgage payment, it doesn't go up. The taxes, the insurance, that can go up and down, but your mortgage payment, it just stays the same no matter how long you keep that loan, 20 years. And rents, like you said, the property values around you are going up, the rents are going up. And so it won't be long until you're paying quite a bit less for your mortgage than people are paying for rent in the same home. And in addition to that, each dollar that you pay in rent goes into your own net worth. So you're paying off that home. That's right. The home is increasing in equity. So you're getting the money from that increase in equity. But even if your home price stays the same, every time you make that house payment, that's $2,000, $3,000, $4,000, whatever, that's sort of going into a savings account. Because that's your money that's in that house. So whether you eventually decide to sell and upgrade to a bigger house, or you maybe are needing to do like a refinance and get a little bit of your equity out to do repairs to your house, those are all options as you go forward that aren't options if you're renting.
A lot of, I see in the older population, you know, those reverse mortgages are becoming quite popular. They have no intention of leaving that equity to their children. They can't afford to pay a mortgage, right, on a fixed income. So I see a lot of those reverse mortgages towards, you know, their elder years, you know, whatever, to make repairs, maintenance, or whatever, because they have no intention of leaving it to the kids anyway. So they use that equity to supplement their retirement and supplement their fixed incomes and different things. So it's kind of interesting, the cycle of a market. You know, to kind of really look at how it all works. And, you know, and I don't think a lot of times the young ones are necessarily thinking about how does the end play out, right? So it's kind of interesting to kind of point out, well, now keep in mind, at some point you're going to be on a fixed income and prices are still going to be increasing. So wouldn't it be nice to either maybe have it paid off or have that smaller house payment? They can always buy it, get that smaller house payment, you know, if they need to.
That's true. Yeah, that's a really good point too, is that if I have some equity in the house, then that's even less that my mortgage will be like. So if I want to just refinance for the amount that I still owe, then that reduces my monthly payment. Absolutely. And, you know, that brings us up another point that people are saying, well, I'll wait until interest rates drop. It's like, okay, well, that's maybe something, but they've for one, might not drop anytime soon. Two, might go up. So it's kind of good
Unless
to get
the world
into the housing market
on itself again, like COVID, not happening. And
right,
do you
exactly.
want the world to implode just to get the lower interest rate? So
I don't think so. Not to mention, it was very difficult to purchase a house when the rates were that way. If you didn't have $100,000 over the asking price in cash to offer. So
that's
these things were, it was very difficult. Yeah. So if interest rates go down and you've already purchased, you can refinance to get a lower interest rate. If interest rates go up and you've already purchased, then awesome, you have a lower interest rate. And if interest rates stay the same, then you're building equity in your home. So now is really the right time to buy a home, regardless of interest rates.
And when I was young, my first interest rate was very, very high. We're talking 11, 12%, you know, and our 5%, 6%, wherever it's fallen today, is still pretty darn low compared to that. But it will never, ever, ever be down to that 2.5 again, unless the world implodes again. And I hope to God the world don't implode again. So I'm not wishing for those low interest rates.
No, we don't want that. We don't want that. We really don't. And, you know, a lot of people are maybe sitting on their homes thinking, I just want to sit with this low interest rate. But the truth of the matter is that the prices of homes have gone up so much that if you're looking for like a bigger house, maybe a couple more rooms, you're having a baby, or, you know, you want to move to a neighborhood that you more wanted rather than your first house purchase, even with the interest rate a little bit higher, because the equity you have in your home, you probably get about the same payment that you
can move that
have
over to the equity on the new house and then have,
that's correct.
You know, have
exactly, pay off some of your house.
Yeah, it might be a little bit more, but it's not going to be drastically. So
no, yeah, and definitely worth what you're looking for. So, you know, it doesn't make sense to not keep progressing in your life and building equity in your home because the interest rate isn't these stupid low places that it used to be.
So keep paying somebody else's mortgage, no problem.
That's right. And thinking the situation's going to change
for yourself, you can pay somebody else's interest rate.
That's right. That's right. And thinking something's going to change that's going to put you in a better position. And it's historically, that's not going to happen. The best time to buy a home is right now, always. So
very true. Very true. Give us your contact information again, so they all have it.
Yeah, absolutely. You can email me at michelle@heroloanteam.com, or you can call me at 559-314-6760.
So much fun. So glad you joined me today. Everybody, this is Realtor Linda Peltz. I'm here for all you and your friends' real estate needs. You just keep those calls and texts coming. My license number is 01997670. I hope everybody has a tremendous day.